All right, everybody, welcome to Ask a Trader for Thursday, May 30th. This is going to be the last one of the month as we prepare for June, the first of the summer series, June, July, August. Weather out here has been very nice. I'm out here on my balcony right now. Little breeze coming through, and life is good. So very excited that everybody can join me here today. Let me make sure the chat is set up for everybody. So you could put your questions in here. All right, so that is set up. Just going to type in a quick hello to everyone. But again, this is the sixth Ask a Trader session. And, I'd like to have you ask questions, ask me to look at tickers. I really want to use this time to add value to what you're doing with your trading and investing. So please go ahead and throw your questions in there. And if not, what I'm going to do is just kind of go through some things that are important that I've been looking at and to just try to share some information with everyone in terms of what's currently happening in the markets. And so one of the things that I did want to show everyone today is just a feature that is in TradingView that is the economic calendar. And it's a great way to stay up to date and informed about what's happening in the broader economy so that you can know these happenings and events before they hit, because they will have an impact on the market. And so that way you could be prepared. So if we just go down here and look in the bottom right-hand side, you can see I'm hovering my mouse over this calendar feature here. If you go ahead and click on that, you'll see that it will pull up the economic calendar. And you can also find earnings here to see which companies are reporting earnings. But you could see here listed, it has all the data that's going to be released on that particular day. And you can see today we got GDP. We also got jobless claims. We got pending home sales, a ton of information. And we have some Fed speakers. We had some Fed speakers. And then what you can also do is you can click on tomorrow, what's coming up tomorrow. Tomorrow we have PCE, which is going to drive the markets. And then you can also get a week look. So if you click on next week, you could see all the information, economic data that's going to be released the first week of June. And so this is just helpful so you can educate and inform yourself about what's happening, what's going down, what's going to drive the markets, because it does. And obviously the inflation reports are what's been the most important, the biggest drivers. And what I wanted to talk about today is just the GDP, which was released. And so another cool feature about this economic calendar is if you go ahead and click on, for here, we're going to click on the GDP growth rate, quarter over quarter, second estimate. If you click on it, it gives you a description of what that data is. So here on the can't talk. On the expenditure side, personal consumption expenditures account for 68% of total GDP, out of which purchases of goods constitute 23% and services 45%. Private investment accounts of 16% of GDP, and government consumption and investment for 18%. As the value of goods exported is lower than the values of goods imported. Net exports subtracts 3% from the total GDP value. So you can get a description, right? Now that's a pretty lengthy descriptor there, but it helps you understand what this GDP means. And you could see that the previous percentage, or the previous reading on GDP back in April, was 3.4%. This month we're at 1.3%, which shows that there's some slowing in the economy. It's contracting a little bit, which is what the Fed wants to see. They want to see things slowing down so that they can have evidence to use for rate cuts. Okay, so that's what we're seeing when we have that smaller number there for GDP. The other thing that we see too is jobless claims were reported today, and believe it or not, bad news is good news for the Fed in terms of cutting rates. And you could see that jobless claims were up 219,000 versus 216,000 last time. And that's what the Fed wants to see. They want to see people losing their jobs. They don't want to see that, but that's what gives them some belief that it's okay to begin cutting rates. Okay. So let's go ahead and look at tomorrow and let's talk about what's big for tomorrow. And that's core PCE. And this is the Fed's preferred gauge of inflation. So, and also notice too, you'll have these three bars here. This indicates the importance of the data that's being released. And you can see you hover over it, high importance, 3 bars, right? And you could see here prior PCE, so last month at the end of April, 0.3%. And the forecast for this month, it's expected to stay flat at 0.3%. But let's go ahead and click on it. And this one actually doesn't have a descriptor here. So this is core PCE month over month. You can also get year over year. Here's a little description. The core personal consumption expenditure price index provides a measure of the prices paid by people for domestic purchases of goods and services, excluding the prices of food and energy. The core PCE is the Fed's preferred inflation measure, and the central bank has a 2% target for inflation. We know that. The Fed is trying to get that inflation percentage down to 2%. Okay, so core PCE, it's personal consumption. So it's what you and I are spending on goods and services. And, you know, if you've been out shopping or if you looked at your insurance bill or anything, it probably doesn't look like things are coming down. But what's expected year over year, 2.8% last month, 2.8% this month. So just like the month over month, it's expected to hold steady, hold tight. Now, what we can anticipate or how does this impact us as traders? Well, a couple things. If these numbers are higher and prices went up, if inflation got hot, as you know, market speak, I guess, says, if it's hot number, if the number's higher, that's going to force the market to sell off. You're going to see a pullback, right? You're going to see selling, which is nothing to be alarmed about because we just recently hit all-time highs. If it's in line, we'll probably see a slight bullish reaction. And if the numbers are very cool and they come in under what's expected, then you can expect the market to pump. Okay. Now, this report is released at 8:30 a.m. in the morning during pre-market. So you can have an idea in terms of, all right, what's my edge going into day trade, or if I'm looking to set up swing trades, knowing that data is going to give you the edge to do that. So in your trading view tomorrow at 8:30, if you just go ahead and click on your economic calendar right down here, and what you'll see, let's go to tomorrow. As soon as that's released, it'll be listed here, the actual print, and then you'll know what those numbers are and in terms of what that's going to mean for the markets. So just wanted to share that with everybody. And you know, May really has been a strong month. We're actually going to look at weekly charts today. And again, if you have any questions, just go ahead and throw it in the chat, or if you just like hearing me share what I have to share, that's fine too. But you know, let's take it some weekly charts, monthly charts, just to look at how things overall went in the month of May. All right, but check that out. PCE coming tomorrow. It's going to be important. So if we look at the SPX, we could see that we are, you know, after we made all-time highs, selling, taking profits, right? Nothing out of the ordinary there. Nothing to be too alarmed about. That's the daily. Let's go look at the weekly. You can see we had this big push. So here's the end of April, right here. And then you had two big candles, or three, actually, 1, 2, 3 bullish candles in May. And then to close May out, we have a little bit of a retracement pullback. Okay. If we look at the monthly candle for May, we could see that we're bullish overall, and we made all-time highs, and we could see we're getting some selling coming in right now. If we go to the Qs, which is our tech index, we could see that this is a bullish engulfing candle. It's engulfing the bear candle on the monthly for the Qs last month. So just shows that the bulls were in charge here, pushed us up to new all-time highs. Again, this is the monthly, right? So this is the month of May. If we look at the Dow Jones has been, you know, beat up a little bit here recently, but you can see that April was a down month for the Dow. It pushed higher in May, but sold off and came back down. So it really didn't hold on to its gains. If we go to the IWM, this is your small cap stocks. This one's struggling because there's no faith or confidence in those rate cuts coming through. And so you could see that, sold off in April, did get pushed back up in May, but couldn't hold those recent highs. So that's just kind of moving sideways. And then if we look at the VIX, this is the volatility index, you can see the volatility is still down. We hit those peaks back when the recent peak was right here. This was when the Iranian Israeli conflict was occurring. And so the volatility did spike for a period of time, but in a sense come back down. So overall, the month of May was bullish across all indices, even for the Dow, even though it did not hold as strong as the other indices, it is selling off. And if we just go back and look, after we've had a run up and then we had a down month, what happens in these situations? So and this is what you do with chart studies. So if you look at the last 3 months, so bull, bear, bull. So let's go back and look for bull, bear, bull to see if we can get a read on what has happened the previous time. So here we go. Bull, bear, bull was followed by bearish candle and then a push higher. We had a bull, bear, bull was followed by a bearish candle and a drop. We had a bull, bear, bull, pushed a little higher and then dropped, and that started a deeper retracement. But the other thing you want to keep in mind too is try to find the candle pattern near similar types of price action. So we're not in a dip right now. We're pushing in an all-time high. So if we go back to this area here, January, February, where we were pushing, here we go, bull, bear, bull. We did push up higher to all-time highs, but then we sold off and then started a deeper correction. Actually, this wasn't January. This is 2021. So, just something that you could do to take a look at to get a feel for what's happening or what to anticipate with the candles. Let's just go through some of the other tickers and look at what they've done here. Here's Amazon, all-time highs pushed up, and this is going to close as a bearish candle. Nvidia, I mean, that's a super strong candle here, very bullish, and that popped on earnings. We talked about that last week, and this thing made a all-time high of 1160. A little bit of a pullback now. This is going to split on June 7th. So it's going to be a 10-to-1 split. So just keep that in mind. It's going to become a little bit more cost effective. So just wanted to put that on everybody's radar. If we go take a look at Tesla, what did Tesla do? Since it pushed higher on its earnings in April, it's just been kind of sideways. And really the way it's looking, we're going to have an inside monthly candle, which that just means that this candle is closing with inside the previous candle. And what that can indicate is that there's pressure building here, that there could be a bigger move to the upside or the downside. If you go to the daily on Tesla, you could see the area where it's getting rejected. It's at this 100 SMA on the daily. So that's the key area to watch on that to see if it can press through. If we go to Apple, check out that on the monthly. Apple had a really strong month. It's pushing higher, is trapping all these bears. There's probably a little bit more room for that to go up. Microsoft had a strong month, made new all-time highs. It's selling a little bit. That's coming back down. If we take a look at Bitcoin, we see that that's trying to push up. I think that this is on its way to making new all-time highs. And I think all things Bitcoin eventually will start doing that. So, we'll see. Typically in the summer, things kind of, I don't want to say slow down a little bit, but there's not as much volume. People are off doing their things with vacation and everything. So you won't see as high as volume. You could still make great profit trading in the summer. But typically there is a little bit of a pullback in June. So we'll have to watch to see if we get that. I know one of the things that I'm doing right now is preparing for the next round of earnings and just getting a jump on that instead of being reactionary. And you could see that that's going to start in July. So there's time now to prep and get things in order for trades that you want to make, or if you want to trade over earnings with options or with shares. Now's the time to start preparing for that, and not the day before. And trust me, I learned that lesson. So that's my overall take here. I'll just leave it open if you guys have any questions for me. And if not, I'm not going to hold you up. We're going to keep doing this weekly. Like I said, just come back with your charts. I'm here to help you guys. And don't forget, I am teaching a day trading boot camp that actually kicks off Monday. If you're interested in signing up for that, if you go to my Facebook, click the registration link. That's going to be a lot of fun. Looking forward to that. Check that out. And that's going to do it for Ask a Trader for this week. Guys, have an amazing rest of your day, rest of your week, and I will see you back here next week and hopefully in the day trading boot camp on Monday. Take care, everyone.